Jeremy Finger here, Riverbend Wealth Management, here to share with you today about the widow's penalty. What is the widow's penalty? Well, it's the difference between filing a tax return as a married couple and in filing as a surviving spouse, otherwise known as a single person. Now, in the year of death of one of the spouses, you can still file jointly. But following that year, unless you remarry, you got to file as single. And there's a big differences in taxation between married filing jointly and single. For example, the standard deduction in 2023 is $27,700 for married couples, and that's $13,850 for singles. So $13,850 for singles, $27,700 for couples. You will have to pay taxes on the differences between the two if you're single. So whereas you can have $27,700 of income, pay virtually zero tax on that, you'll have to pay some taxes on that amount as a single person. Long-term capital gains, almost any income, if your total income is under $89,000, you may have to pay zero capital gains tax, long-term capital gains tax. All right. That is reduced. That amount of money is reduced to $44,000 and change. So those limits drop dramatically as a single person. In addition to that, annual gift exclusion, which means like if you're giving money away to a person, is $17,000 per person. So I can give $17,000 to my son. My wife can too. God forbid if something happens to me, the following year, she can only give $17,000 to my son, not a total combined of $34,000. Okay. Ordinary income brackets, just for an example, the 22% bracket for a married filing jointly couple in 2023 goes from $89,000 and change to $190,000 and change. Okay. But if you have $190,000 in income as a single person, you're not paying the 22%. You're not in the 22% bracket anymore. You're in the 32% bracket. And so from a 22% bracket to a 32% bracket, that's almost a 45% increase in taxes in that bracket. It's insane. Also, Medicare premiums. If you make $190,000 as a couple, your Medicare Part B premium for 2023 is going to be around $164 a month. Okay. If you have $190,000 as a single person, you're not paying the $164 anymore because it's means tested. That Medicare Part B premium will go up to $527 a month. 164 to 527, that's almost a 3 times increase in the amount of Medicare premiums. So what do? As a married couple and as a smart investor like yourself, working with somebody, making sure they're doing every single thing they can while they're living to help reduce taxes along the way. Do your tax planning as a couple. All right. Because if one of you passes away, obviously that the brackets for a single person are a lot worse than they are as a couple. You got questions about anything at all, certainly feel free to give us a call here at Riverbend Wealth Management, 843-970-1049, and happy to help in any way possible. One final thought. Most of the time, someone's reading these newsletters or watching this video, they're interested in the investments, which means typically the other spouse is probably less interested. And doing this tax planning while you're living is going to help reduce the burden on your surviving heirs, your spouse, your kids, your grandkids, if you have everything set up right. All right. And so many times we'll have one spouse that is really engaged in the financial planning. They pass away. Then all of a sudden that burden is on the surviving spouse. Now, fortunately for them, what we do is a complete financial plan for them so that it reduces tremendously the amount of aggravation and the anxiety around making some of these financial decisions. don't wait. We don't know when death is going to call us. So really do everything you can to not only be tax efficient while you're living, but also help reduce the stress involved for those who may be your surviving heirs. I hope all's well with you. You got any questions? Certainly feel free to give us a call, send us an email. Happy to help. Thanks and have a great week.